So for the last 4 years, the stock market, particularly in the US, has been on an epic tear. We're basically back to where we were before the financial crisis in 2008. And now the question is, are the indexes going to, the indexes reflect, stocks in general, are they going to keep going up, setting new records? Or are we going to see some more of this kind of sideways movement like we saw in the last decade where, we had some big peaks and some big drops, but we basically ended the decade at the exact same place that we started? People that are skeptical about the future of the stock market right now, they look and they see a lot of not very encouraging economic indicators. The US, they're still dealing with this fiscal cliff and debt crisis issue. The European Union is still in a recession. The growth in China is slowing, so it doesn't look all that positive. But what experts tell you is that there's really not, there is a bit of a disconnect between where stocks are going and where the economy is going, and that's because stocks are generally a leading indicator. Investors are looking out maybe a year to 6 months and saying, this is what we think is going to happen. So right now the stock market is reflecting probably what investors are thinking is going to happen in 2014, not 2013. So that's why the two don't seem to be tracking each other. I talked to this one guy that calls himself a market technician. This is someone who studies historical patterns of stocks and tries to determine what they're going to do in the future. And he told me about a dinner he had, I think about 43 years ago, at a famous steakhouse in Lower Manhattan. And one of the attendees at the dinner was an 70-year-old man who had basically been covering the stock markets in the US for his better part of his adult life. So the fellow that I talked to, he asked him, what was the hardest market for you to read? Because you've basically lived through all of these eras. And then he kind of stopped himself and said, it must have been the stock market crash of 1929, which took the entire world by surprise. And he said, no, we lost a lot of money then, but actually the hardest one to read was the early 1960s. And this guy sort of scratches his head and thinks, that didn't seem that difficult. Like the stock market was just generally going up throughout that entire decade. And he said, that's true, but nobody wanted to believe it. And that's because they had just kind of come off this high. There was this flash crash in 1962, and no one could quite believe that the good times were getting better. And the exact same thing happened again in 1980s. There was another sort of decline in the stock market, and then it went on basically a 15-year bull run. But for the first 2 or 3 years, no one could quite believe it. Investors stayed out, and then they missed a lot of those early gains.